Good evening, good people. Welcome to another 203K Tuesday. I am Aaron, the house person, and this is the place you come to find out everything you don't know about the 203K loan and learn how to use that loan to help create, build, and sustain generational wealth. So, if you caught last week's episode, I was talking about ADUs, accessory dwelling units. And those are basically like that. Like if you've ever been to a timeshare and they'll have that separate unit next door, even though it might have an adjoining door, that unit has its own bathroom, own kitchen, living space, bedroom, everything, right? It's just a completely separate unit. So ADUs are pretty much the same thing. Maybe not having that lockout door situation, but it's a separate unit at your home, right? Whether that be a detached one, whether it be attached, whether it be actually in your home, because you can actually carve out a little space inside your home and make that an ADU as well. And as you may have saw last week, there's so many uses for ADUs that are extremely beneficial to pretty much anyone who has them. Uses such as um, uses such as aging in place, and that one for me is pretty high up on the list, considering the fact that so many people are turning 55 and 65 every day in America. Also considering the fact that we have a lot of uncertainty going on right now economically, and it just may be a time for families to consolidate, right? And you can do that with everyone still having their own private space, but being together, being nearby, in case someone needs some assistance. So, aging in place can go for a family member, but it can also be a situation where you need to age in place. And in addition to that, just the cost of healthcare, the cost of assisted living, nursing homes, you know, all of those places. It's an it's an extreme amount, really. As you may have heard me say last week, my grand godmother, she was paying north of $5,000 per month for the location that she was in, and this is a normal, regular thing, and prices more than likely will not go down. So you adding an ADU space to your home, um, it's not going to cost you $5,000 per month, right? So you're saving money right there. And then you have your loved one very nearby. Um, and it's just the benefits outweigh the downfalls, right? Um, in addition to that, you may just want to make one to have something to offset your mortgage, right? You have some rental space, you using your main property um, to start real estate investing, to a degree, right? Or like I said, you just want to offset your mortgage. But today, I am proud to bring back actually a returning guest, Mr. Lewis Hibbs, and he is with Neo Home Loans. Lewis is going to talk to us about how we can connect the 203K with that ADU space. So give me a second. Let me bring Lewis in now. There he is. Lewis, how you doing today, sir?
I am doing great, thank you.
Good, good. Welcome back to the show. Greatly appreciate you returning and spending some time with us today.
I appreciate you including me.
So, I don't know if you remember, I mean I do, but you were actually the first person I interviewed on the channel also. I don't know how many years ago. It was a few years back, but like I say, it's absolute pleasure to have you back and to talk about something that is really, really emerging, um, and something that's I think people should really get excited about because of the opportunity that it presents for them, their family, legacy, generational wealth, or just saving a couple of dollars. So. Um, Per usual, I just like to jump right into the questions, and then on the back end, we'll do some catch up on what's been going on with you and business and all that good stuff. Is that cool?
Great.
All
Yes.
right. All right. So, as I already told the guests excuse me, the audience that we are talking about ADUs. So, the very first question is, can a 203K loan be used be used specifically to finance the construction or conversion of an ADU on a single family property? That's kind of a loaded question.
Yes, it definitely can. And the news came out, I think, about a year and a half, 2 years ago that was a thing. And I don't know all your questions, but I do know with people living longer, having an ADU to have your folks live with you or your grandparents live with you is a great opportunity to not have them go into assisted living or a senior home. And it's, of course, also a great opportunity to earn money because you can rent it out and have that opportunity to make some income from the rental.
Okay, so he wasn't there doing the intro, but as you see, folks,
Oh, sorry.
these are definitely some of the benefits and major benefits that that ADU space can provide folks. All right, cool. Does the 203K loan allow financing of both the main home and the ADU together as part of one renovation project?
Yes, it does. One of the big benefits of the 203K loan is that there are no limits on the amount of work you can do as long as you're within the limits of the area that you live in, because the different areas have different limits. And also, as long as the house appraises, you're good to do both the renovation and the ADU.
Okay. So per usual, folks, like I say, you always got to have your pen and something to write on because you just never know when you're going to get that special gem or have a follow-up question. All right, so are detached ADUs eligible for 203K financing, or does the loan only apply to attached or internal conversions?
So FHA requires everything to be attached. Um, you can't even build a deck in the middle of your yard that's not attached with a 203K. So whether you're doing a deck or an ADU or a garage, anything you're adding on a 203K loan must be attached to the primary residence. And typically it's done with a breezeway. And it depends on architecture and yard size and all those things, but typically it's done with a breezeway. And yes, the 203K, anything you build, it has to be attached to the home.
Okay, so if I heard you correctly, if someone has like a standalone separate garage, if they were to build a breezeway attaching the home and the garage, then that garage can be converted to an ADU?
Correct. That is correct.
Okay, okay. And all right, just to pivot a little bit, because we're talking specifically it being attached. Um, so that means that it can't be detached. Now, although we're talking more so about 203K, 203K does have a
Renovation
cousin.
loan.
Yeah. So it does have a cousin. And would that loan product be able to be used for, detached ADUs?
Yes, you could use that for a detached ADU. There are some limits for percentage of loan amount. We typically don't run into a problem with that, but conventionally, they don't want the construction to be more or a larger percentage of the property value. And that's something we look at up front when we're helping clients decide what way. We don't decide what you want to do for your loan. We educate you and you decide what you want to do for your loan. But that's one of the things we talk about. I've only run into it one time in 10 years because they were buying the house really cheap and doing a lot of work or really inexpensively. And when you do that, there is a limit. But outside of that, you can do it conventionally and have it detached.
Okay, okay. So just, you guys be aware, although we're focused on 203Ks, it does have a cousin, first cousin that conventional loan that can assist you if you did want to have that detached option versus having attached. And remember, breezeway is not necessarily like a tunnel, right? So it's not a hallway necessarily attaching the properties. It's just, something that is connecting both structures so that there's something that's touching them and now they're attached, right? So it still can be a separate space, but be attached to your residence or your main property. All right, cool, cool, cool. So how is the value of the future ADU factored into the after renovation appraisal for loan qualification?
So there's a couple things that are involved in that. Number one, the appraisal's done up front before the work is done, which some people know, some people don't. So anyway, I wanted to clarify that. So the appraisal's done up front, and the appraiser will appraise the property, the house, the ADU, whatever is involved. They will appraise that as if all the work is complete and the value is already there, adding that ADU. In addition, they're going to do rental comps because if you plan on renting it out, you're able to use 75% of the proposed rent to help offset the mortgage payment or the debt. So if it's your ADU, I'm going to do a simple number I can do in my head, but if your ADU's, if the appraiser says the ADU is going to rent for 1,000, then we'll credit $750 towards your mortgage payment as seven.
Did I freeze? I don't know if I'm frozen or if Lewis is frozen.
Front before we close and before we start construction.
Okay, so there was a little freezing going on. I'm not sure if it was me or you. Um,
You were freezing a little bit too earlier, so
uh-oh.
I'm hoping when it goes to production that your editor can have no pauses.
I'm hoping so too. Okay, so if you could just recap the answer you just said, just to make sure that it was actually captured, because I didn't see it or hear it.
So the appraiser is going to appraise the property up front prior to closing, prior to any construction. They're going to assess the value of the property based on all the work being completed, including the ADU. And then they will also calculate what ADUs or that size unit are renting for in your area. And we will give you credit for that 75% of whatever the value is towards your mortgage payment to help offset the debt. So, simple example, if it's $1,000 in rent, we're going to credit you $750, knowing if there's going to be insurance and other things involved with renting a property, repairs, turnover when tenants change, and those types of things. But that is all done up front prior to closing and prior to construction starting. So we have the answers up front.
Perfect, perfect. All right. Mm, Okay, so you actually just answered that question. So the next question was, how does the appraisal process work for an ADU? Do you include the future after improvement value or after renovation value? So you pretty much answered that. Um, no worries, you didn't see the script. But can a project can a projected rental income, see, there you answered that one too. Can a projected rental income from the ADU be used to qualify for the loan?
We're putting out good information, even if it's not in the order that you want, right?
Absolutely, absolutely. And some of these are just going to actually just come out based off of any question because it just may lead that way. So it's all right. All right, here we go. What are the limitations of the total loan amount, and how do the soft costs such as designs, permits, etc., factor in into the 203K budget?
So if you're doing an ADU, you're going to be using a consultant. The levels of loans limited is up to $75,000 in repair. So you most likely are not going to find a market where you can build an ADU for 75,000. Plus, you can't do structural work. So you're going to be using a consultant. And there's a little confusion on the consultants with what they are, but the consultants are validated by HUD, and they're going to come in and look at the contractor's bid and determine that things make sense, that it's right and they're going to come up with what we call hard costs. In addition to the hard costs, there are going to be architect's fees, design fees, permits, those types of things. And all that is reported on a single report. And then all that can be financed into the loan. One of the things that happens a lot is because you don't want to get a loan for an ADU you can't build, the first step, if you decide you want to do an ADU or you want to convert your garage into an ADU or you want to put a basement apartment in with an extra entrance, the first thing you need to do is check the zoning in your jurisdiction, county, city, wherever you are. It's no sense in getting all excited if they're going to turn you down. So checking the zoning first for side yard setbacks and all those things are a key part. Typically, somebody engages an engineer or an architect to do that. And when they do that, there's going to probably be some fees that are paid up front. With the 203K, we can reimburse you for those fees at closing as long as you present us with a paid bill. So if you have to put out $2,000 to start the project, then we'll give you that $2,000 back at closing so that everything is then financed with your loan.
Nice. Okay. So is that like in the form of a credit, or is that just rolled into the new loan amount?
Well, it would come if you're doing a purchase, then it would come off of your down payment closing cost. If you're doing a refinance and it's not a lot, then you could get a credit for it depending on what your closing costs are.
Gotcha. Okay. Perfect. All right. So this is a question that I know a lot of folks have. Can people use their own contractor, or must they be on some type of approved list?
That is a great question because that's the probably the second biggest confusion on how these loans work is the homeowner can use any contractor they choose and they only need to get one estimate. I don't know that that's always the right thing to do, and I don't whatever people want to do makes sense to them. If you know, trust, and like the contractor, then you get one estimate, and we use that estimate, and then the consultant's going to make sure that the line items aren't too high or too low based on what the market values are. Every lender that we work with does what we call a validation on the contractor. They're going to check to see the contractor has the proper license, and it's different again for every state and county. They're going to make sure that the contractor has the proper insurance, which includes liability, the primary one, and then potentially workman's comp. Although, if a contractor works for himself or herself and they have all subcontractors, they're not required to have workman's compensation. So they have to have the liability. The workman's comp is based on the style of company they have and what they sub out and what they do in house. And then they also have to have some references. And the key to the references, not only do they need to be people that they did a good job for, but they also need to be people that they've done a similar project for. And the example that comes to mind happened to me is somebody picked a contractor and all their references were for roofing. So when I called the contractor and said, "Do you have any references that aren't for roofing?" He says, "No, all I do is put roofs on when they're going to put solar panels on." So the solar company calls me, I put the new roof on, they put the solar panels on. I said, "Well, have you ever built an addition?" And the contractor said, "No." And I said, "Well, I'm sorry, we're not going to approve you as a roofing contractor to build an addition." So it's key that the contractor has done projects similar to yours. And a lot of people, when they do their due diligence, will check references up front. Can I see some pictures of work you've done? Can you give me some clients you've worked for? But the contractor has to have experience doing what you're doing in order for typically the company to validate them.
Okay. So not necessarily going to call your plumber to run your electrical wires. Gotcha.
Exactly. And he could be very good at it.
It could be.
That's not the answer we're looking for.
Gotcha. All right. Let's see. Okay, well, yeah, I'll still ask the question, but are there any specific contractor requirements or approvals needed to work on the 203K finance ADU project?
Well, there is one thing that contractors should be aware of, and I make them aware of this. Typically, I'll have a conversation with the contractor at some point to make sure they understand they're on board. But a typical contractor is going to walk in and get a 10, 20, 30% deposit. And so they use that money to pay for the dumpster, pay their crews to demo, order materials, those types of things. On a 203K, because you're borrowing the money, all the money is sitting in an escrow account. You can get a deposit for materials, and lenders are different on this, but you can get a deposit for materials, but then you won't get any money until work has been completed. So the contractor you choose has to have some accounts, whether it's Home Depot, the local lumber yard, a line of credit. They use their credit cards. However, the contractor does it, they have to get to the job to a stage where there's work completed so that the consultant can come out and get them money. The best part about this, which to me offsets the fact that you're not getting any money up front, is the fact that there's no milestones to be hit. So typically with like a construction perm loan where you're building a house, you have to get foundation, then framing, roofing, windows and siding, those types of things. With a 203K, there's no milestones have to be hit. So if you've done 80% of the demo, 20% of the electrical rough in, 30% of the plumbing rough in, and 5% of the framing, the consultant will add all that up and send you 90% of that money, holding back 10% to the very end. So I probably just answered four more of your questions, but that's a key when you're hiring a contractor, because if they're working on a shoestring budget, it's going to be very difficult for them. And what we don't want is the contractor starting your job, then running out and starting another job to get a deposit that they can come back and work on your job, and then they're robbing Peter to pay Paul, as the old saying is. So it's important the contractor has some wherewithal to finance part of the project while they're waiting to get paid.
Gotcha. Yeah, there are instances where, like you say, robbing Peter to pay Paul, or as they like to say, floating, right? They're floating money where it may not necessarily supposed to be in order to try to complete multiple projects, but you definitely want someone who has the financial capacity to take on not only just your job, but any other jobs that they sign up for. So, but
Correct.
that's good to know that they have that option to at least get that material draw to get things started. And they got to take care of paying their guys for the labor and everything. But you got the materials there, and the no benchmark. That's powerful. That's a good thing too. Okay, so who manages the renovation draws and inspections throughout the project? Is it the owner or buyer, the contractor, or the lender's consultant?
Well, I like to have all three people involved. So when the contractor says they've completed enough that they want to get a draw of money, they will contact the consultant, and the consultant will try to find out what they have completed. And then the consultant will set an appointment. And we like to have the homeowner, the consultant, and the contractor all at that appointment. At that time, the consultant's going to walk through, look at the work write up, go ahead and see what's been completed, take pictures of what's completed, and then they ask the customer if they're satisfied with the part the contractor is asking for. The customer always says yes, because it's done. It's either done or not done. There's no gray area when you say I've framed up the basement or I've torn the garage down or whatever. So then the consultant goes back, puts all this in paperwork. Then they send out a DocuSign type of form. Everybody signs it. It gets submitted to the lender. And typically within 7 to 10 business days, the contractor gets the money. There are companies that will allow the contractor to have the money wired right into their account. Some companies send out a two-party check, which is a little more of a challenge when you walk into the bank, because you have to have the contractor and the homeowner there typically, unless you have a really good relationship with your bank. But yeah, so then the money gets wired to the contractor, and it's a joint effort, though, in my opinion, where everybody knows what's going on.
Gotcha. And I want to go back actually because you mentioned 90% and the 10% holdback. So can we go a little deeper into that? And that way, not only homeowners understand it, but any potential contractors who may be looking to get into the 203K space can understand that a little better as well.
Yeah, and I should probably mention two 10% now, because there, when I consult with a client about the 10%, there's two 10%, actually three. So the first one is when we appraise the house on FHA 203Ks, we are allowed to use 110% of the after improved value. So that's the first 10%. So if a house appraises for 300 and the work and the purchase, or the work and the refi are a little over that, we're actually going to use $330,000 so that the loan can close. There's a few reasons for that. The primary one is that everything you do to a house to improve it doesn't give you a dollar for dollar kick. So every house has a roof. The fact that you have a brand new roof is worth something, but it's not worth everything that the roof costs. Every house needs to have a furnace. Again, you replace your furnace, you're not getting dollar to dollar right there in the appraised value, because every house they appraise has a furnace in it. So we allow 110% of the after improved value. So it helps with the things that aren't actually adding square foot or increasing the value of the house. The second 10% is a 10% contingency. So if you are doing $100,000 worth of work, and that's what your scope says, then we're going to add 10% to that. Typically, it could be more, but typically we're going to add 10% to that, so that we're actually putting 110,000 into your escrow account, so that if you open a wall and there's termites, or you find out the sewer line's clogged once you started the project, or you find rotted wood when you open up the walls, there's money to cover that. That contingency money is used specifically for that. And then there's other things we could talk about later, but primarily it's so you don't have to go into your savings account or put it on your credit card if they find something odd going on. The third 10% is the 10% that's held back, so that when the job is 100% complete, there's 10% left for the contractor when you have the use and occupancy, the final inspection, and everybody says the work is completed. And at that time, they release the 10% and pay the contractor that final 10%. So throughout the job, they're getting 90% of each completed stage, and the 10% is held till the end.
Gotcha. Okay, the three tens.
Three tens.
And so there are some instances where that middle 10, the contingency 10, can actually be a little higher. Is that correct?
Yeah. So based on the type of work you're doing, based on when the underwriter sees the photos, based on the fact that you don't have water and electric running at the time of the appraisal, those are things that will trigger 15 up to a 20% contingency based on the type of project. I was on the phone with somebody the other day, and the contractor thought that his price was okay. The consultant thought it could be a little bit low. So we increased the contingency to 15%, so that if something came up, the money was there. And so it's sort of thing you have a conversation with and figure out. If you don't use the contingency, it reduces the principal amount of your loan. However, it doesn't reduce your payment until you come back and refinance. So if you don't use any of the contingency, the example of 10%, and you owe the bank 300, you would now owe the bank 290 because you didn't use the 10,000, but you still be making payments like it's 300 until you refinance.
Gotcha. Okay. What is the expected timeline for loan approval and disbursement, and how might that affect ADU construction and scheduling? That's kind of what I'm.
So we like to have 60 days from the time you've made the decision and made the application to get through the process. And so depending on how much you've done prior to the 60-day start period, it's going to determine if we can close quicker than 60 days. And I've been doing these loans for a long time, and I cannot tell you, even to today, the realtors who have the representing the buyer say, well, I'm going to put 30 days and then we'll just come back and ask for an extension. And I've learned that that's not a good plan, because if you tell people up front what's going on, then they're going to trust you and the relationship's going to stay strong. If you submit an offer and say we're going to close in 30 days. And then in 25 days, we're like, well, we can't get this done. We need a 30-day extension. It just starts the animosity. On my pre-approval letters for renovation loans, I always include in the pre-approval letter that we need 60 days to close this loan. And I'll typically call the listing agent and say, look, I could tell you 30 and come back, but why do I want to have you as an enemy? I want you to be my friend. So let me tell you the truth up front. It's 60 days. We can do it sooner we can because we all work on commission. We'd love for it to close quicker. But if something happens, we'd like to have the 60 days to make sure we can close in 60 days and do it right for you. And as agents get more educated about these loans, they realize you can't close it in 30 days. There's just not enough time. And this could be the next question, but the primary reason is we can't do the appraisal until we have the contractor chosen and the pricing set up. And that normally takes the first 30 days because somebody will have a contractor come out, give them a price. Oh, I love this guy. And then their friend at church will say, oh, you should call Joe. He's going to give you a better deal. And then Joe comes out and so it always just takes longer than people think. So it's 60 days before you can start work. The amount of work can go up to 12 months of construction once you're closed, depending on the scope of work. But they're not going to give you 12 months to build a garage. So if your job's detailed, there's a lot going on, permits, design, and stuff, they will. But typically they want the job time frame to coincide with the type of job it is.
Okay. Is the requirement for the ADU to be owner occupied, or can it be for investment purposes?
It can be owner occupied or investment purposes as long as the primary house is owner occupied. So the person who's applying for the loan needs to live in the primary house, and then the ADU can be used for either investment or a family member.
If the project runs over budget, and we kind of talked about this a little bit, but if the project runs over budget or time, what options are available for additional funding or extensions?
So the contingency, whether it's 10, 15, or 20%, is sort of your over budget. Typically, I've had very few projects go over budget because of construction. They go over budget because of the client's selections. So the client, you put in $3,000 for appliances, and the client goes to the appliance store and they're like, oh my gosh, I got to have this stove. And you're at $4,000. So the clients have to sort of be reeled in to stay within their budget if they don't have the money to pay out of pocket. In addition, on the contingency, they're not going to release those funds early in the project if it's not for urgent and immediate needs. So if you go pick out your kitchen cabinets, which are going to be put in at the very end, for example, and you find kitchen cabinets that you love that are $2,000 more, they're not going to release that money out of the contingency in the beginning because they don't know if something urgent or immediate is going to come up. So at the end, you could potentially spend the contingency money on upgrades. However, you need to check with the consultant and the lender. Just don't go doing that thinking it's all going to be okay. So as far as the money, that's sort of how that works. As far as the extension of time, lenders don't like to extend them, but they will always extend it because a completed project is their security. The lender doesn't want a house that's three-quarters of the way finished. When everybody thinks about foreclosure and them taking the house back and calling your loan, no lender's going to do that because they want the house finished. So they will extend and work and help you as much as they can to get the house to completion. Most lenders are calling you after 30 days if you haven't taken a draw.
Mhm.
What's going on? Why haven't you taken any money? Is the project on schedule? And whether it's permits or material delays or whatever it is, the lender wants to know what's going on because you taking money makes the lender happy. They want that money out of their escrow account and into that house. So their security for the house is completed and they have a saleable loan.
Okay. Um, and yeah, so now we're kind of in times where, things are a little more normalized. I had some folks that I interviewed a few years back, and they started their process during COVID, and because of various things, including having to change contractors, they actually had to change consultants as well. But they were having delays for materials because of COVID, because things were moving very, very slow. And their project took them about 2.5 years to get completed.
Wow.
Yeah, yeah. So that, I mean, that's definitely not normal. I mean, they were happy at the end of it, but due to a lot of circumstances that they endured and experienced, it took them much longer. And this is before the change of 9 months to 12 months. So, so like you said, lenders will give you that grace because they want a finished product. We can't resell. I mean, we can, but we're probably taking a loss at an unfinished product. So they want to see that to the full completed scope of work and everything. So
Yeah.
all right.
I just talked to a client who wanted to do a bathroom owner's suite renovation, and they did their kitchen during COVID, and they could only put in their kitchen what they could find at the time. So
Mm,
they were very specific about, we want to pick our own stuff and get the stuff we like as opposed to in what's in stock, because they did their kitchen during COVID, and because there was limited supplies, they had to choose what was available.
mm. Yeah, those were rough times, rough
Yep.
times. All right, let's see. Okay, we got that one. So once complete, can the ADU be refinanced separately or must it remain under one mortgage?
It's typically going to be under a single loan because of how your lot is set up. Typically, people aren't subdividing that lot into its own parcel. So it's going to be a single loan. You could refinance the entire loan, but you wouldn't, unless your house was paid off, you wouldn't really have a separate loan on the ADU. You'd have that money tied to the ADU, but it would be still tied to the whole house and the single parcel of land. But you can refinance when the work is finished and you have your use and occupancy.
What are the biggest risks or common pitfalls you've seen when people try to build ADUs using 203K financing?
Well, the biggest risk is that you can't do it, and you need to find that out up front so that doesn't become a risk anymore. So if you go to your local zoning office, they'll tell you how big it can be, and then you work with your contractor engineer sort of figure that out. Um, the other risk is I think that a lot of times clients think that they have this all figured out because they've talked to us once or twice. And you really need to work as a team from the day you decide you want to do this till the day you get your use and occupancy. And the lender can be involved. I talk to clients throughout their construction. The consultant, of course, is involved. If you have a situation where you're like, well, we were going to do a 2-bedroom ADU and now we're going to do a 1-bedroom ADU, well, we have to find out from the appraiser if a 1-bedroom ADU based on the square footage is going to bring the same rental income and it's going to have the same value, because it possibly could not have the same value. And then, so it's the consultant, the realtor, the lender, the homeowner, the contractor. Everybody needs to be involved throughout the process as the whole thing. And I also think that I try to tell people up front there's no such thing as a dumb question, because these loans are underutilized and they're misunderstood so much. And I can't tell you the number of times I've had a realtor call me who doesn't understand the process and say, how are we going to get all this work done before they close in 60 days? And I mean, I like want to drop the phone. Look, no, we're not doing any work there. It's not their house till we close. We're not doing any work until after they close, and they're the owners of the house. And then the work starts. They're like, oh, that makes me feel so much better. So it is a misunderstood product, which is why Aaron's doing what he's doing. But it's just sometimes it's like, you got to have a good team that knows what they're doing, and they have to understand this product, the idiosyncrasies of the product, the ins and outs of the product, so they know how it works. And so, in my opinion, the biggest challenge is people staying with their team, getting the knowledge, and understanding that we're only here to help. We're not here to be bosses. We're here to help and help you understand the process.
So team, together everyone achieves more.
Exactly.
You said that word
Exactly.
a few times, and that is definitely one of the biggest things that I've harped on pretty much in any interview. The strength of your team, that starting lineup, as I call it, that that is what really is going to dictate whether you have as much as possible an enjoyable experience, or one where you like, oh, I hate the 203K. I can't believe blah 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 blah. Because I mean I've heard some horror stories, but even with those, for the most part, at the end, everyone I spoke to said, I'm glad that I got the finished product. I wish I might have maybe had some changes along the way, but having that strength of team, that really strong team, as strong as possible, that will help to alleviate some of the issues that may arise, and if they do arise, to kind of usher those things out the way as soon as possible. So yes, team, strong team.
Yep.
So, what are the biggest advantages and uses you've seen with building an ADU?
Well, sort of what I started with and what you talked about in your introduction, people are living longer now. That's just sort of how the world is, which is a good thing. As a side step, that's the reason there's not much housing available, is because people are staying in their houses longer instead of selling and moving into retirement or unfortunately passing away. So this is a great opportunity where if you have a member of your family, a senior citizen, whatever I think I may be one now. I'm so old. I'm not sure when that starts. But if you have somebody that needs a place to live, they can stay by themselves. It's a great way to have your family around, your kids, your grandkids get to see the people. They have a safe place to live. If they need some help or food shopping, you can do all that and they have a place to live. And that happens a lot. And then the other, of course, having the rental income is nice because what you're trying to do with your property is build equity. And in most markets, you do build equity by owning the house. You're paying the house down. The house is appreciating in value as time goes on. Well, if you add this extra factor of your house is now worth much more because you have an ADU, and the people in the ADU are helping you pay down your mortgage and increase your equity all at the same time, it's a win-win-win. So it's a great way to do it. And as I don't, some famous person said they're not making any more land. Well, that's the fact. And that's why ADUs are so popular, because they're not making any more land. And a lot of the jurisdictions have figured out that they've got to have zoning set up so that people can do this. So there's housing for people, because a lot of people don't want to start out with a house or a big apartment. They want a small place, get their jobs lined up, get income coming in, save up a little bit of money. So it's a great opportunity and a win-win-win on all sides.
So one edit, that phrase has stood the test of time, excuse me, and until Dubai came along. I don't know what they're doing over there, but they're making land somehow. They're crazy. But that's a standalone situation. That doesn't happen pretty much on a normal basis. So
Exactly. You strike oil, Aaron, you can make land too.
I'm like, man, they made a what? But for all intents and purposes, no, they're not. No more land is being created. And you got to utilize what you have to the best of its usability, highest and best use, right? Um, so as far as like the sizes, um, and there may be some red tape around that, but like, are there any caps on the size of the ADU that people can create?
It's all going to be by zoning. And it's interesting. I've had situations where even though they were doing a detached ADU with a conventional loan, the zoning of the neighborhood required it to be attached
Mm,
without getting a variance. So if you want it to be detached, you have to get a variance. So there's height restrictions, there's size restrictions, there's all these things that the counties and cities come up with. So that's why doing that zoning check in the beginning is so important. because I had a situation where I wanted to put a garage and an addition on, and they were going to have them separate. And the county came back and said, you have to get a variance. And everybody's like, why? Well, if you attach it, you don't need a variance. They were like, well, that doesn't make any sense. But, and that wasn't lender requirement, that was county requirement. So that's the kind of stuff, again, whether you need to make a call or you need to go see them or you need to talk to six people, that's the kind of things you got to find out up front, so you know what you're dealing with.
Well, that's actually a perfect segue because the next question was about the order of operations for those who are looking to get an ADU started. So it sounds like first and foremost, you need to see if that is even allowed for where your home is located.
Correct. And whether you deal with your contractor, I've done enough of these, I know sort of who to call, and I've gone and checked on them before. If it's close, of course, I'm not going to go to Utah, but if it's close, I'll check in. But Aaron knows. There's contractors that know. There's engineers that know. The county will give you the information for free, and they'll tell you, well, if you need. And sometimes it's the way they set up. It's odd. So, like in some counties, your side yard setback is 15 feet, but it's not 7.5 on either side. It's 5 on one side and 10 on the other. And so same with rear yard, front yard, orientation of house, all those things. So you need to find that information, because then if your lot is 50 feet and you only need 15 feet on the sides, then you can build a pretty large addition. Not that you'd want it that big. So you have to do all those calculations and sort of figure that out. But zoning is a good place to start. And then also knowing the values in the area, because when the appraiser does an appraisal, they have to find houses that are reasonably close to you. Now, with an ADU, you have a little bit more flexibility because they try to find a house with an ADU to do that. So you have a little more flexibility, but if it has to match the value of the neighborhood, you can't have $1 million house in a $500,000 neighborhood, because it's just not going to appraise and work out typically.
Gotcha. So for someone who is probably new and kind of creating the market, so they may not be like they're the first ADU or first person trying to create an ADU in their neighborhood. What type of challenges do you think they may encounter being first?
If the zoning says it's okay, then we have to work with the appraiser. And oh, I'm drawing a blank what the word is, but we can't talk to appraisers anymore the way we used to. So
Right.
it used to be you call the appraiser, hey, here's what I'm doing. What do you think? And he'd say, oh, let me look around and find out. Well, now the lender orders the appraisal from a rotating list of people.
Mhm.
And a lot of times we don't know who the appraiser is till they get there. Um, but you have to have a conversation with the appraiser. We're the first ADU in this area. Can you find something that's a few miles away? We'll write an explanation and do that type of thing. It potentially could be a challenge with the appraisal. But again, if you do the 203K, you have that 110%, which can help a lot depending on the value of the main property, if it's a refinance, if it's a purchase. But again, those are all the kinds of things that you get a team, and then we all sort of figure out the best way to do it and see what research we can do up front.
Okay. 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 So as far as the basic financing, that is what typically are lenders looking for people, who are looking to refinance or originate a loan for using the 203K.
Well, you have to have okay credit. Everybody says 620. There's people that go to 580. It's rare on a 203K they'd go to 580 credit score, because there is an additional layer of risk on renovating a property. You have to have fully documented income. There's no bank statements or no ratio loans, so fully documented income. And then, I don't want to say for everybody, but typically ratios somewhere in the low 50s. Some people go up to 56%. So that would be the percentage of your gross income that goes towards your housing and all the debts that show up: student loans, credit cards, car payments, all those things. And also, it's been pretty popular lately that these companies, where you can buy something and finance it for 4 months for free are starting to report to some of the credit bureaus. If they're not reporting to the credit bureau, when the underwriter sees your bank statements, they're going to see if you have payments to a firm or PayPal or those types of companies. They're going to count those in your ratio. So again, we'll look and figure all this stuff up front, but we need to sort of know what the numbers are going to look like up front. And in addition, since the ADU money can be counted to help offset your mortgage, we have to have a pretty good idea close of what the ADU is going to rent for so we can calculate that into your income and debt situation.
Gotcha. Okay. Um, since you mentioned student loans, I know that's one of the things that, you know, it- it's we had some student loan forgiveness proposed, some student loan forgiveness that happened, some retractions. How does the student loan situation, how does that navigate it for folks who actually do have student loans in place?
So, the first thing we do is we ask the client to get the payment numbers from the student loan servicer because we found that the payments that are on the credit report are typically not correct.
Mm.
So I'll call a client and says, "Oh, it says your student loans are 600 a month." They're like, "No, no, I'm paying $180." And then they get us the information and they are paying $180. So that's one thing we do is we check to see what the servicer says the payments are. If they're in deferment and they're not paying right now, we still count a percentage towards their debt. So even if they're not paying student loans because they're, a physician or they're just started their job and they got a year off before they have to start paying, we still count a percentage of that towards their debt. And the student loans, are unfortunately, since a lot of them are backed by the government, they can be a dead stop if somebody's defaulted on their student loans or isn't paying them because you're asking the government to lend you money for a property now. And the government's saying, well, you didn't pay your student loans. So I'm not so sure we're going to lend you money to buy a house. So
Mm.
that's the kind of thing we got to sort of work out and figure out up front if they have any of those situations with student loans.
Gotcha. Okay. Okay. So Lewis, it's we actually met a while ago from me having a situation with the client and me seeking out some people who basically say, "Hey, this is what I do," and I reached out to you. You had no problem answering my questions, and that has been the case since way back then, right? I actually have, I'm not going to show the company name, but I actually have, still have,
The hard hat.
yeah, still have the hard hat from way back when. So yeah, see, folks, if you didn't see the interview from like many years ago, Lewis would come out to the projects, have his hard hat on, and I was just amazed because I haven't had, I mean, I've had loan officers come to settlements before, but come out and take a look at the space, look at the house, and say, huh, X, Y, and Z. So, could you tell folks a little bit about your background and how you're able to, come on out to the houses and put your eyes on them?
Sure, sure. So I went to vocational school during high school and became a carpenter to carpentry, framed and built houses for a while. Went into retail, went back into construction. So I have the construction knowledge and background to sort of understand what goes into it, what needs to be done, what doesn't need to be done. As I got into the 203K loans, I quickly learned what the minimum standards were because when we talk about the work that needs to be done, which we didn't talk about on this video, the client wants the stainless steel appliances, the granite countertops, and the glistening hardwood floors. FHA wants no broken windows, handrails, no tripping hazards, no lead paint peeling. And so when it comes to those types of things, I always try to temper the client with, okay, let's walk through and see what you have to do. And then we'll go from there and figure out what you have to do and what you want to do. And so I know the one we walked through, the client had this one idea, and Aaron and I were there and we talked about what if you do 2 bedrooms, 2 baths, and that's going to get you a lot more rental income, which Aaron knew. I sort of knew you could fit two bedrooms and two baths from my experience of looking at the place, and it ended up being a big win for the client. So it's easy to walk through a property, help establish a budget, have an idea what things are going to be and what things make the most sense. And again, it just goes back to the team. If you have people that have done this and enjoy it, and I really do enjoy it because there's nothing better than watching an ugly house turn into somebody's beautiful home or a renovation, oh, now we have a garage or now we have this ADU for a family. There's nothing better than seeing that go from a concept and then you go through the roller coaster ride of getting everything done, and in the end everybody's sort of happy because that's what they envisioned in the beginning and they actually got it. So it's a lot of fun to do these loans, and it's much better than I always tell my clients, the more educated you are, the easier this process is for me because we've talked about it and you already know the answer before it comes up.
Nice, nice. So yeah, folks, like I say, Lewis has been my go-to guy since I met him. So, if I have questions about 203K, um, or renovation loans in general, sometimes I feel bad. I'm like, oh man, I got to call Lewis again. Let me see. But he's there for me. And again, like I say, having strong people on your team with experience, and as you hear the background, building houses, switch over to the lending hat, and that background of building houses helps it make it a lot easier to advise people on their process from the lending aspect for sure. But he could be a consultant if he wanted to, but he got enough hats. He got enough hats. um so I got a couple of bonus questions, kind of sort of like a lot of people are into the container homes, and you see that popping up. Is that something that could potentially be used with the 203K and ADU space as well, or is that like kind of a standalone situation?
I think that's a little new because there's a lot of jurisdictions that don't even have the structural part of inspecting that and what you would do with it. And you take a container that is solid and has been that way for 20 or 30 years, shipping things all around the world, and you cut a bunch of holes in it for doors and windows. And so I don't think a lot of the jurisdictions actually have it figured out, because what typically a lender would do would say, well, what does the county say about you building with a container? And the county is going to be like, well, we never saw this before.
Mm,
And the closest correlation I could make would be when the barn dominium thing came happening. And a barn dominium isn't type of loan, it's a type of house. It's like anything else. So structurally, it's right, it's safe, it has bedrooms and bathrooms, everything's fine. The container thing is going to be a new and sort of a one off. I think you'd have potentially more opportunity and or luck, if you want to use that word, if you were trying to build new construction with container, because a small bank could sort of understand and they look for a lot of engineering stamps and those types of things. But um, I'd love to know if somebody's done one, and maybe I can do some check-in with some of the people I know to see if anybody's done a container ADU or a container garage. That'd be an interesting to find out.
that would be. That would be. I have that on my list of accomplishments, so I want to help someone with the container homes,
Okay.
and we'll figure out how we can do that. So Lewis, that's all I got for you today, man. I appreciate your time. For folks who are looking to get connected with you, how can they get in contact with you?
So best thing is call me on my phone. I have one phone. It's 443-695-8513. And really you don't have to like be committed. It doesn't matter to me. I want you to have the right information. So the key is to reach out, talk to Aaron, talk to myself, and find out sort of how it's going to work and what'll work for you and what won't work for you. I mean, Aaron and I did a loan in DC for a woman who was renting the house for a long time and didn't think she could buy. And she couldn't almost believe it when we got her approved. She thought I was messing with her. And so those are kind of stories that we love to do, but it all starts with a phone call. And always feel to reach out. pick our brains, ask us questions, tell us your scenario. Because if you're not ready now, we can get you ready. We know how to get you ready in the next 4 to 6 months, what to do with your bank statements if you've had cash deposits, what to do with your credit if you need your score to boost, what to do as far as having money in the right place, co-signers, all those types of things we can help you with. It doesn't have to be today, but don't be sitting 6 months from now and you still haven't done anything. Let's start now with a phone call.
Let's start now with the phone call. I mean,
Should I
that's
trademark that?
you might have to. We're gonna race. No, I'm kidding. We got you on film saying it first. But let's start now with a phone call. That is, we're gonna put a pin in that one right there. That's a bar. Um, so look, folks, hopefully you gain some great information and have a little better understanding of how 203K and ADUs are a really good marriage. And also, if you have a certain situation, there is a cousin to 203K that can also assist you with the ADU creation. And as you see, we have someone here who is very well versed in the process and the things that need to happen. So, and he's already said, hey, if you got some questions, let's start with a phone call, right? So you can give him that phone call. But that's all I got for you guys today. And I will see you on the next 203K Tuesday.